strong moves coming in for the Hang Seng market, which is up around 300 points.
Is all futures trade on Nifty, which were placed on SGX Nifty earlier, will be routed to GIFT Nifty.
On the Nifty, the upper end of the rising channel, because it's a rising channel, the levels also change, now stands at 19,315.
I believe there will be a double-digit growth for the commercial vehicle.
The first tick is in. The Nifty opens up, gap up. We're getting used to this now. Nifty up close to around 60 points.
I know it's all-time high, but if you see on a two-year basis, the market hasn't really done all that much.
On a retail basis, the industry is now in low single digits.
No sign of nervousness. There is nothing stopping the bulls right now. 19,300 has been conquered. We're up.
Because the numbers are looking so good. Now let's run you through how the numbers shaped up. The consolidated sales numbers are up by close to around 20%.
We already have 40 more members in pipeline, so by this year end we should have around 100 local members at the NSE IX.
This is the affordability factor, the income levels in this segment not rising as high as the prices. For various reasons, prices have been going up.
Propane pricing will be higher in the country, and it was already expected to go higher.
He said that Ajit Pawar never called him, and in fact, he said that he is the one who is the reliable face of NCP.
For the markets, for a change today, mid-caps are actually underperforming. That's been the case for last 2-3 trading sessions.
Well, that was a day so far. You're with us here on another edition of Closing Bell, last hour of this Monday coming up. We're coming to you live from the CNBC-TV18 News studios. I'm Prashant. With me, my colleague Reema here in the studios. Surabhi will be with us in just a bit. And Nigel, of course, joins us from the newsroom floor. Guys, hi, good afternoon. It's another strong day, isn't it? And, you know, galloping ahead, I think that's the right word to use. 100, 200 points for the last 3 days. That's the kind of track record, the market is laying out for itself. And we are above 19,300. I mean, just 3 days back, you were, still looking for that all-time high at 18,887, and now you're basically 400 points away from that particular level. So just racing up. On the Nifty, and just to kind of, by the way, banks are outperforming, and this is something we said, day before and the last session on Friday and today as well. So banks are doing much better. For the Nifty, the upper end of the rising channel is 19,315. We're at 19,319. The day's high was 19,336. So let's see. A close above it, perhaps matter of time. Perhaps we'll see that today. But for now, we are basically round about that upper end level. It's also getting perhaps in the very short term a little overheated, isn't it? Based on hourly charts, Nifty hourly charts, the relative strength index is now around 90. Which basically means that you are extremely, in the very, very near term, perhaps overbought, which also means then that you could get, suddenly out of the blue, a bit of a shakeout. The market, turns south, goes sideways for a day, 2 days, when the RSI cools off, and then perhaps we've seen that happening before. So keep an eye out on this one because we've kind of accumulated very strong gains very quickly. Supports on the Nifty, again, these are very short-term levels, can be kept on the Nifty at 18,976. And on the Bank Nifty, they could be kept at 44,340 kind of levels. These are the nearest kind of, based on hourly charts that I could find, supports that one can see. As I said, I mean, once you're in new all-time highs, you've got to change. If you are very keen and you think the market's going higher, as has been the case, it's not just sufficient to wait for the dips to buy the dips because, the texture is turned over the last couple of days. You're not getting dips and then the market's getting bid higher. You're getting gaps, 60, 70, 80 point gaps, which then go on to become 150, 170, 200 point gains like what we've seen over the last 3 or 4 trading sessions. Reema.
Aye, and the good part is today around 11:30, 11:40, there was a dip in the markets. Profit booking, the Nifty went down to levels of 19,250, but that dip was swiftly bought into, and once again, the Nifty's conquered the 19,300 mark. Consumption names are now, moving up. Pull up the intraday chart of HUL, pull up the intraday chart of ITC, and you would see stocks are surging. So HUL is, recovered quite sharply from the day's low. So it's up about 0.6%, so 2/3 of a percentage point gain. But ITC has raced away to a 1.7% up move. Reliance Industries has been a big contributor over the last couple of days. A one-week chart will tell you that 3 days ago, the day before the markets hit that all-time high levels, Reliance Industries was struggling around, sub 2,500. And since then, it's been climbing up 2 percentage points every single day. So that's been a big mover. HDFC Bank has slipped a bit from the day's high. It's up 1.5%, but not quite the 3% rally that we had at opening. State Bank of India, on the other hand, is at the session high. This time, unlike the last two trading sessions, there are pockets of red. There are sectors where you are seeing some weakness in profit booking, and today it's in the IT space, pharma, and the Nifty Auto Index. Pull up all these indices and you would see that there is some red on the screen. Also, Surbhi, large caps are clearly leading from the front, and this has been the trend over the last 2-3 days.
Absolutely, and Rima, it's getting a little more pronounced this afternoon because now the mid-cap index has cooled off. The Nifty continues to be at the day's high, practically at the day's high. Whereas if you look at the mid-cap index, let's pull up the intraday chart of the mid-cap index. It's up just 0.2%. That's the Nifty chart. Let's look at the Nifty mid-cap. Yeah, so there you go. It's been a very subdued session for this part of the market today. I'll just talk about, though it's a very strong day, I'm just giving a flavor of the kind of mid-cap stocks that are seeing some profit taking. They've had a very strong run, so you can't fault people for perhaps taking some profits. Look at Paytm is down about 2%. Sula is down about 2% as well. BEL. These are some of the names. Then there's Manappuram. These are some of the names. HBL Power Systems. Remember how much this stock rallied around, the rest of the railway pack as well. They're into signaling and train safety. So it's about a 1% decline. Again, these are not massive falls that are happening on these stocks that have run up so much, but there is a tendency to book some profits after what's been a phenomenal mid-cap rally. But then, there are new movers and shakers on the way up. Today, some of the PSU banks, by the way, look at Canara Banco. About a 5% up move there. Bank of Maharashtra, Bank of India. Very strong day for PSU, mid-cap PSU banks today. And we'll talk more about this as we go forward. But Nigel, I guess bulls have solid control. Their grip is very firm on this market.
Well, the bulls are feeling very, very confident. And sometimes overconfidence is a little bit danger. But in this sort of a market, well, you need to stay long on the index, right? Just take a look at the kind of put writing we have seen. I'm only going to pull up one strike. That's a 19,300 put. And take a look at the open interest build-up. Don't look at the total open interest. The open interest build-up today itself is more than a crore shares. That's telling you how confident, the bulls are feeling in today's trading session. There's a big surge that we've seen out there. Also, I want to focus on the PCR. The Nifty PCR has moved to around 1.5. So it's trading at the upper end of the range. So just keep an eye on that mark. It was moving to around 1.6. So that's sometimes a bit of a cautious sign. In the near term, the trend is up. Make no mistake about it. Don't have to short this index. But in the near term, these are a couple of cautious signs. One is the PCR. That's moved to around 1.5 and it's holding at those levels. And on a day that the Nifty is higher, the India VIX as well is higher. Normally, they have an inverse relation between two. So I just want to point that out. Maybe in the near term, things are getting a little too bubbly and too enjoyable. So watch the screen, stay long, but trail your stop losses as well. How do you position yourself, though, for the final hour of trade? Well, to help us out with that, Mitesh is back with us. Hi, Mitesh. Good afternoon. Thanks so much for joining in. Mitesh, tell us, good session, holding with a 100-point gain, but how do you approach trade from here?
Very good session. In fact, after the rally which we have seen, the kind of strength which the markets have shown is very, very nice. I think it adds to the feeling that this market will have more upsides. The back 50 participating is obviously helping it out. So I think, my idea is to maintain the long positions, trail your stop loss to 19,200 on the spot, and hope that this rally extends to about 19,450, 500, maybe even higher. So I think with that, trailing the stop loss is what I would recommend. I have a buy right now on Grasim. It's a conditional buy. If you look at the chart, around 1785, 1790. Hello?
We can hear you. Go ahead.
Hello?
Mitesh, we can hear you. Go ahead.
Okay. Yeah. So around 1785, 1790, I think is the area where the stock has peaked out on multiple occasions. So buy about 1790, keep a stop at 1765, and look for targets of roughly around 1860 to begin with. And the second stock on the list is PNB. The public sector banks are showing very good strength. So PNB is a buy with a stop at about 52.80 for targets of 55.
Okay, interesting calls there. Let's talk about L&T Finance. That's clearly been the stock of the day. There is a management change. The street has given it a thumbs up. For more details, let's go across to Abhishek. Abhishek.
Well, looks like, the street has given up to the fact that change is good for L&T Finance. So, current MD and CEO, Mr. Dinanath Dubhashi, will superannuate on 30th April 2024. Dubhashi will also act as the special advisor to the chairman of the board during that period. So, Sudipta Roy will take over the company as its MD and CEO effective 24th of Jan 2024. Currently, he's serving as group head at ICICI Bank on the unsecured assets, cards, payment solution, consumer finance or other retail products as well. So under Mr. Dinanath's tenure, that is from 22nd of July 2016 to right now, the quarterly ROE is actually dipped from 9.8% to about 9.4%. The AUM has grown by a little under 40% in last 28 quarters. Gross NPA ratio has moved from 4.6% to 4.7%. It had hit a high of about 11.7% in Q1 FY18. There is something called as defocus book that L&T Finance had formed, which was around 4,405 crore when Dinanath took over. It increased to as high as a little under 13,200 crore as of Q2 FY19 and right now is at just 328 crores. The AUM had hit a high of about rupees 1 lakh crore in Q3 FY21, but since then to now it's declined more than 19,000 crore. We have Motilal Oswal who has written on the stock. They say that the announcement comes as a big positive for L&T Finance as it is tandem with its endeavor to transform into a retail franchise. So the stock currently trades at about 1.2 times FY25 price to book value, and Motilal Oswal see that increase to 1.5 in the near term and about 2x in the longer term. Back to you.
Thank you very much for that. Gurmeet Chadha, of the Chief Investment Officer at Complete Circle, is with us now. Gurmeet, the question now really for L&T Finance Holding is, at these levels, is the stock attractive? Because in March, towards the end of March, the stock was trading below 80 rupees. And now it's climbed to levels of 136. There you have that 6-month chart, and you would see that one-way swift up move. A 75% rally in about 3 months for L&T Finance Holding. But as Abhishek points out, the valuations still appear to be comfortable at 1.2 times, price to book FY25. So would you bet on L&T Finance?
See, some of the positive changes are in the price. They clearly spelled out that they want to run down the wholesale book to just 10%. In fact, they have created almost provision of, if my memory serves me right, about 2,500 crores against any accelerated sell down in the book, which they realized after they sold their mutual fund business to HSBC. And any change of guard with likes of Sudipta coming in is welcome. We've seen that it makes a big difference. It's made a difference in IDFC First Bank. It's made a difference in ICICI Bank when Sandeep took over. So I think leadership makes a big difference. Also, they've hired some good people, especially on their urban finance segment. They had Sanjay Garyali from Kotak, who's done a great job there. Actually happened to be my ex-bosses in HDFC Bank. So they're building a good leadership team, clear segmentation between how much they want to do farmer finance, how much is rural business finance, how much would be urban, taking a lot of digital initiatives. And as you said, the valuations are relatively, I would not say in absolute terms reasonable, but relatively more reasonable considering that. So if they can really demonstrate the retail finance business and go aggressive there and demonstrate good, return ratios and asset quality, even at this price probably deserves a look. But as I said, a large part of the current developments are in the price.
Okay, so that explains the enthusiasm on L&T Finance today with the impending management change. Gurmeet, stay on. We have more questions for you. Since we're talking about stocks that are buzzing and are in sharp focus today, let's also look at BSE. Now, BSE has been up 7-8%, pretty much 7-8% throughout the session. We'll just pull up the stock for you in a minute. Now, why is it rallying? It's rallying because the Bombay Stock Exchange is going to consider a buyback of its shares. And that seems to have gotten people very excited. So, Ravi, tell us more details. Obviously, we don't have any idea about the pricing, etc. But, what can we infer looking at their cash levels, perhaps?
So they're going to consider this buyback on 6th of July. Now, looking at the cash levels, it's a very cash-rich company. They have around 92 crores of cash on their balance sheet. This is close to 25% of their current market cap. Additionally, in June, they had sold their stake in CDSL, for which they had received close to 470 crores. So along with that, now total cash balance available to them is 2760. Their net worth is 2800 odd crores. So the buyback size could range anywhere between 280 to 700 crores. Anything above 700 crores, they will require shareholder approval. So, but they have enough cash on their books to fund this buyback. Apart from that, last week NSE has withdrawn its notification of shifting their bank Nifty expiry to Friday on BSE's request. So that also will have additional volumes on BSE, and they have been gaining market share in the cash segment as well. So all of these things are going to work in favor of BSE.
Okay, got that. Thanks very much for all the details, Surabhi. Stock's doing well, up about 8%. In the last 1 year, BSE has put on only about 10%. It's not rallied too much. If you look at the year, the last 2-3 months of the market moving higher, of course, so has the stock. But BSE is still well off its peak. Now, that's the question. In 2022, the peak was close to 950. Today, the stock is at about 650. Stock markets are doing what they're doing. How would you look at it? Would you at all, look at getting in BSE, since we don't have the other exchange listed just yet, NSE?
So, Subi, it was a tactical buy when it was at 400 levels, because probably the cash and the market cap are identical levels, right? And so I think they're pulling things back a little bit, as evident from the business performance, and that's more important. Otherwise, you have to be focused more on buybacks and any tactical pullbacks. So I think if they continue to gain some share, they're doing a lot of work in options. There's some surge in the number of contracts traded when market made a new high last week. Your colleague pointed out to some gain in cash segment also. So if that continues to happen, but mind you, it trades at 40-41 times earnings, right? NSE in unlisted market is 22 times earnings. Right, so it's not easy for everybody to get access to NSE in the unlisted market. But I'm just giving you somebody which has 90% market share versus BSE. I think we are more long on something which is more structured, is something like CDSL or some of the the RTA agents of the mutual funds. That to us is more structured, more asset light. CDSL also has recovered from 900 levels to now 1100 plus now. And as market picks up, the IPO action picks up, the transaction charges will stage a recovery, which was slightly subpar. They also have a lot of annuity charges, which makes the revenue very granular and stable. And host of initiatives, including insurance also, the dematerialization starting there as well. So that to us is more structural, more long term versus BSE. I would personally prefer NSE if somebody has access to the unlisted market.
No point taken. But by the way, have you bought NSE for your clients? That's like a
yes we have. Prashant, long back, 3 years back almost.
3 years back is for it close to 1,000.
Around 900 levels. Currently, it trades at about 32.
Yeah, absolutely. Well, we'll take a quick commercial break. Gurmeet, stay with us. We are back on the other side. Mithun Aswath of Kiva Advisors joins in for more on markets. Stay tuned.
Welcome back. Let's talk about some more stocks which are buzzing in trade. Gujarat Gas, the government has increased the duties for propane gas imports for industrial use. Sonal is here to tell us more. Sonal.
Thank you so much for that. Well, it is a positive news coming in for Gujarat Gas because remember, they were facing stiff competition from propane use in the commercial segment because of lower pricing. But with this move, it will mean that propane will become more expensive, or at least there will be a price hike here, and that's why the stock is excited. So here, the import duty has been increased to 9.25% versus 2.75% with effect from 1st of July, and that would mean an impact of around 6 rupees per SCM on propane pricing. That would be this increase which is expected. Now remember, in July there was an expectation of a propane price cut because of global prices being lower, but with this move it would mean that there is at least a level playing field between Gujarat Gas's price and propane pricing as well. Propane prices before the import duty hike was at 32 to 33 rupees per SCM. Gujarat Gas pricing was at 38.6 rupees per SCM. Now companies will have to take price hikes in the propane segment, and that would mean that volumes could go back to Gujarat Gas in the industrial segment, and that is where they have been seeing a lot of pressure. So this has come about as a relief for the company.
Okay, all right, Sonal, thanks a lot for that. Gurmeet, what do you make of this news space? You know, earlier this morning, Gujarat Gas was flying away. I think it was up 4.5%. From the top, it's come off a little bit. So propane, to bring it in as a customer, you'll say, I rather use the gas. How much of it has already played out? Will you continue to remain positive on Gujarat Gas from here, or do you think bulk of the good news is it?
It becomes difficult to have a long-term view in light of policy changes. But yeah, this development is definitely positive. In fact, if you see last quarter also, there are almost like 8.9 million SCM. Even their margin was around 7 per SCM, which was better than what the street went it for. The Morbi volumes have improved. Even the CNG volumes were better. And as Sonal pointed out, I think there is some parity after the price cut between the propane and the natural gas prices. But as I said, difficult to make a view. And then there are other city gas distributors also which we track. But currently no position here. And there are some other spaces we are looking at where there is more clarity.
Okay, got it. So that's a take on some of the gas utility companies. Some top gainers on the index, SBI, HDFC, ITC. Gurmeet, before we let you go, I mean, today is the momentous day, right? The merger is finally complete, and we'll look out for the merged entity shares to start trading as well. But, and you've had a positive view on HDFC Bank for a long, long time. We all know that. But I'm just saying, would you start looking at the other stocks any differently, whether it's SBI, because now you have HDFC Bank really closing in, and HDFC Bank is going to be twice the size of an ICICI Bank by assets. So how would you look at the top rung banks, and in terms of just the basket that you want to own in top of the line blue chip banking, what would be your pecking order?
So if you see, I mean, HDFC Bank after this merger would be 25 lakh crore loan book, which is what, about $300 billion. You pick the top 10 banks of the world, they are all $3 trillion loan book, right? Balance sheet. So I think India needs probably, I've been making this point, maybe 5-6 HDFC banks more as we scale $5 trillion over the next 4 or 5 years. So I think it will be constructive as long as the entity can grow at 18-20%, which they have been, the combined entity. I think I'll continue to be constructive on it. SBI, to my surprise, actually has not really caught up post the Adani episode. It's not really come back to, and it's not reflecting, the price is not reflecting the business performance. They had a very good quarter. My sense is with the numbers coming in of Bank of Baroda, Bank of Maharashtra, I think PSU banks have demonstrated some credit discipline, right? Which and if you see system-wide, the NPAs are 3.8, 3.9%. Not seen this in a long while. SBI still is roughly about 1.1 book value. I think if you see their provisioning, you see the digital underwriting they are doing, see the digital sourcing for a lot of the retail products. I think there's clear shift happening from where things were earlier. So I think I'm pretty constructive. So maybe Kotak hasn't done well. So tactically speaking, if I were to look at only the top 4 or 5, I would probably add more weight. HDFC anyways, we own like almost 7-8% in the portfolio. We'll probably add more weight to Kotak. It hasn't done anything for the last 3 years. And I think they went a little conservative in COVID, but now they're coming back. And in PSU banks and SBI. I think these are the two spaces, probably we want to add more weight.
Gurmeet, I've been noticing your faltering commitment to the Chola Bhatura theme. I've not heard anything from you about the latest, the new places, or or maybe I've missed it. But it's been a while since we were.
It's due, Prashant. I think we'll probably give more updates to QSR. That's another favorite sector we like. So it will follow up soon with Jubilant and some of the others.
Do you think any of these guys will ever start to sell, put Chola Bhatura on the menu? Why not? Yeah, it's just waiting for someone.
It's waiting to happen. I'm telling you, Prashant, there's an idea right there. Maybe if they're listening, any of them, whether it's Jubilant, or some of the others as well.
Maybe complete circle.
As a branch out into a different line of business.
Absolutely.
Okay, I think it's really whet our appetite. Thank you very much for being with us on the show. Always great having you on. Thanks for joining in, Gurmeet. Okay, so that's the market, that's stocks and some Chola Bhatura. But we're going to move on and kickstart our next conversation. Mithun Ashwath, Managing Partner at Kiva Advisors, is with us on the show today. Mithun, great to have you on as always. So what do you think? 19,000 plus, some serious momentum, and the market has, completely shown a new sign of life in the last three months. So first of all, what are you doing? Are you also simultaneously booking profits, or are you buying every single dip? How are you approaching things at 19,000 plus?
Yeah, good afternoon, Surabhi. Yes, the markets have, scaled a new landmark. But we have to take this into context. These numbers are much higher because of the percentage moves now. A 5% move is 1,000 points on the Nifty. So year to date, I think the index is up only about 5-6%. And we still do believe that, in the last few weeks, you saw a lot of rally in the mid and small caps. We could see some, catch up from the large caps. And I think that's what's been happening over the last a few sessions, because there are several, marquee names, large caps, which still do have steam, according to us, over the next 3 to 6 months.
Okay. One such idea, Mithun, that you like is ever-ready industries, right? And you basically believe that the Burman family coming in that's the kind of a fulcrum around which you're building the case for this one. But the Burman family came in some time back, right? It's been a few years now. And we've not really, the electrical equipment that they sell, lighting, etc., those products, etc., also been on the shelves on sale for a while. But has traction really picked up in any meaningful way? Why are you hopeful here, Mithun? Go on. Yeah,
I think, Prashant, this was one of the investments that the Burman family had made. But the Burman family over the last 1 year has actually become the promoter shareholder. And, they have appointed professional management to run this company. What you need to look at is that, the earlier, owners of this business did not really invest on the brand. And over the last 6 months, you've seen the new management come in and spend quite a lot of money on marketing and to reinvigorate the brand. Now, you would be aware that Eveready is the largest in terms of market share on the battery side. They also have the highest market share even in the torchlights, which they sell. The business which they entered recently, and they have about 300 crores of revenue last year, is the lighting solutions. And that is where, they are going to see growth. They are expecting, the 300 crores to go up to about 500 crores over the next couple of years. Also, last year, you saw margins kind of dipped for this company because of raw material inflation. Plus, they had some expenses towards consultants that they had paid. So I think FY24 and FY25 will be more normalized years for this company, wherein, you will see revenue growth, plus, the operating margins should improve. So these are two triggers, I think, for the company.
Mithun, afternoon. What have you made of the auto sales numbers? The weakness in two-wheelers is painting a somber picture. Hero, Bajaj Auto, TVS Motors, all of them missed the mark. For Bajaj Auto particularly, this time it's the domestic demand which has been weak, and now Bajaj Auto is the top Nifty loser with a cut of close to about 2%. What were your key takeaways from the June sales numbers on two-wheelers, passenger vehicles, CVs, and how does it change your investment thesis?
Yeah, afternoon, Rima. Now, the couple of companies that we've been betting on the OEM side have been Eicher Motors and Tata Motors. Both of them reported reasonably good numbers. Tata Motors on the EV passenger vehicles has seen good growth year on year. Having said that, there has been a little bit of a degrowth on the overall CV sales, but the HCV sales continue to grow Y on Y. So Tata Motors has done a reasonable set. Also, Eicher Motors continues to grow on a year-on-year basis. They continue to grow even this month. I think maybe Hero disappointed a little bit in the numbers for this month, but there have several launches. I think their Harley Davidson is also being launched as we speak, and they have several launches coming this year. So I'm not too sure that the market would be too fussed about 1 month's numbers, especially coming off, May's numbers where, there was a lot more growth because of the wedding season.
Okay, so that's a view on some of the auto names. Mithun, now how are you holding out for IT? Because that's the next big event. I think no one's expecting any great quarter. Most of the notes that are trickling in are saying that this is going to be more of the same sluggish talk that we saw in Q4. Have you been accumulating at lower levels after we got the Q4 disappointment, or are you going to steer clear till there's some sign of a pickup?
So, we played it through some mid caps and some large caps within IT, and at lower levels, we have continued to accumulate. Some of the ideas that we've been positive on are companies like TCS, Persistent, and Explio on the small cap side. And these have done reasonably well. Infosys is another one that we've been monitoring and, adding at lower levels because I don't think we can really time the bottom. There is obviously concern, and I think most analysts on the street do peg in Q1 not being very good. Having said that, the same year to date, you have the NASDAQ going up 35-40%. So who's going to be right in this is a difficult call. But I think the large caps on declines are showing reasonable value. Infosys is at the lower end of the PE range. And they also have got some large deals in the last few weeks. I think with the Danske Bank, they got about a $400 million deal. So large deals continue to happen, and that should hold them in good stead.
Mithun, I remember maybe you've gotten out of those positions, but you like the hospitality space, even operators like Thomas Cook, etc. Do you still have that view?
Yeah, Prashant, I think we continue to hold onto this idea. If you actually see, Thomas Cook had corrected some time because of this implementation of TCS. However, the last couple of days, the government has changed the policy wherein up to 7 lakhs, the existing TCS policy of 5% will hold, and 20% will be only on the excess of 7 lakhs. And this will be applicable only from the 1st of October. So this definitely bodes well for, the domestic operators. So I think this year will be a year wherein outbound traffic, where, the recovery rate has only been about 60% so far for Thomas Cook, is likely to inch up towards that 100% over the next 2 to 3 quarters. And that's what I think the management expects. So FY24 will be a good recovery year, but FY25 could be a really bumper year for the company is what our expectation is.
Any NBFC which looks attractive to you, or where there is value at current levels? Because most of them have had a fantastic run-up in the last 3 months. Just this month itself, L&T Finance is up 32%, Shriram Finance is up 25%, Piramal Enterprises is up 24%. So the question is, if someone wants to get into the NBFC space, which stock is attractive?
Honestly, Rima, on the financial side, we've held our guns only on the two large companies, the private sector, which was HDFC Bank, HDFC, and Kotak. But in the small cap side, we have been doing some work. There are places where there is value. Companies like Ujjivan, even for example, Manappuram, do look attractive in terms of valuation. But this is not something that we have advised or invested in, but just on the valuation parameters, these look quite attractive.
Okay, got that. Good talking to you as always, Ashwath, and we look forward to our next conversation. You have a good rest of the week. We'll take a break on that note when we come back. Of course, check on what's buzzing in the dealing rooms. We'll see what's the chatter that Nimesh is picking up. And then we, of course, get you some trading calls for the final few minutes.
Welcome back. Well, we're holding with that gain of more than 100 points. 19,300 is there. The only problem is mid-caps, they're doing a bit of an underperformance. Good time, though, to get insight into D-Street chatter. Nimesh is with us. Nimesh, what are you picking up in terms of flows? As strong?
Nigel, flows are quite okay. Like, it's mixed again. But again, the rally is largely led by the large caps. Yeah. That's been the constant feedback, right? For the third day running now, the mid-cap and the broader markets have relatively underperformed. And barring few pockets of outperformance in the mid-cap and small cap, you're seeing broadly some bit of profit booking as well in that particular space. Even in terms of flows, again, it's a mixed day is what I understand. There is equal number of selling as well in some select pocket. I guess the theme today is clearly the PSUs, whether it's PSU banks, the OMCs, or for that matter, even the power PSU stocks, all are buzzing in trade and are well bid as well by the large institutions. So that is one space which has done well. On the other side, some bit of profit booking in IT names, and of course, auto stocks after the monthly sales have seen some bit of profit booking as well. But the theme is maybe as we move further higher, it looks like the rally will get narrower and narrower, and only few large caps may relatively outperform. Today we saw what happened to Reliance. I mean, that's helping the Nifty to rally higher. HDFC Twins is helping for the last few days. So that's the overall feedback. And maybe the Nifty will continue to inch higher, led by some large caps, but you might see some bit of profit booking in the broader markets.
Oh, that'll be interesting. But in the broader markets, there's plenty of news flow, right? That's coming in there. So tell us your top 4-5 picks that you've got for that.
So in terms of individual names, the first stock on my list today is IDFC Limited. That stock is buzzing into it 6-7% up into this trade. I understand the merger ratio with IDFC First Bank is likely to come very soon, and that could be the big trigger, because once the merger gets through, the holding company discount in IDFC Limited will go away. So there is still a room of a bit of outperformance, and hence you're seeing big volumes and big surge in that stock in today's trade. So that's the first one. The second stock is Havells. After a long time, some bit of buying seems to be back in that stock. Looks like a large FI selling seems to be done away with, and hence you're seeing a bit of a move in that stock as well. The third stock is Bandhan Bank. I spoke about large part of the blocks being done because now there is a promoter restrictions as well. But there could be still a large block in Bandhan Bank, and a strategic investor could be a likely seller. So that's something to track in Bandhan Bank. And the last stock is ICICI Bank. Within the financials and especially within the private banks, this is one stock where there is a small market at close selling from a leading FI. So I think that explains a bit of underperformance of ICICI Bank vis-a-vis the private banks like HDFC Bank and IndusInd Bank. So small selling is what I understand is going to be there in ICICI Bank today.
Thanks very much, Nimish, for that. So we'll keep an eye out on the list of names. As always, Mitesh is with us with a quick sense of what to buy or sell today for a reverse trade when we come back tomorrow. Mitesh, good afternoon again. What do you have?
Sorry. In fact, IDFC First Bank was on the list. It's a BTST with a stop just below 81 and a target of 83.5, 84. And ITC is the other one. It's at the all-time highs. It's at the swing high. It's a BTST with a stop at 456 for target of 470.
Okay, so basically there are three sectors which are under pressure today. The big one is pharma, where the Nifty Pharma index is down over 1%. The other one is the IT index, where the technology index is down nearly 0.5%. And I just want to quickly run you through what brokerages are expecting this time. Not getting into the numbers, but the big picture. Morgan Stanley is saying Q1 is going to be weak. The outlook for Q2 is going to be weak, and they're expecting that post this earnings season, we will see downgrades. FY24 EPS estimates will be downgraded. Jefferies is saying Q1 earnings on an aggregate basis will decline. Margins will contract because of wage hikes. Infosys is likely to narrow its guidance. The guidance for this year was 4 to 7%. They expect Infosys to say it will be 4 to 6%. So basically, it's unlikely the company is going to hit the upper end of the guidance, and their estimates are anyway below consensus expectations. So perhaps they're also expecting some downgrades of the consensus expectations because it's on the higher side. Ambit believes the companies will tone down growth expectations. Remember, the investor community or the market is anticipating a rebound in second half of the year. But they believe maybe the companies this time will tone that expectation down. So LTI Mindtree, for instance, could tone down its double-digit growth guidance because the asking rate to achieve that is very, very steep. HSBC is saying that the key is going to be the outlook for Q2, and that will help them protect the downside. The near-term triggers are missing, but considering the valuations, according to them, they're quite undemanding at these levels, so it can protect the downside or lead to a positive surprise or a recovery if there is a positive surprise. Today, they've downgraded Tech Mahindra and LTI Mindtree to a hold, and you are seeing pressure on those names. Mayuresh Joshi, Head of Equity Research at William O'Neill, is with us on the show. Mayuresh, from the lows post Q4, that's sometime in April, most of these stocks have had a pretty good recovery, 10% up, 17% up for names like Tech Mahindra. Were you surprised by the resilience in the IT names, and would you change your position or your stance ahead of the numbers?
Afternoon, Rima. So relatively, mid-cap ITs have done and fared far better than the large-cap IT names across the board. And to a large extent, I think the revenue growth, both in constant currency and dollar terms, along with very, very stable margins, decent order wins, and a very positive commentary, I think all that was abetting the kind of strong moves that you probably saw among the mid-cap IT names. Now, within that, I think a lot of these ER&D companies, the likes of KPIT, Sonata, LTI, Mindtree, Persistent had a very good run. But valuations are a little bit rich at this point of time. Large cap names obviously disappointed in the numbers gone by. And to a large extent, the first half is still expected to be a little bit more muted, both in terms of fresh order wins coming in, the execution thereof. And though margins might be a relatively better off, stable in my opinion, because of a lot of factors working in their favor and tailwinds that we have probably seen. Expansion probably looks very, very difficult from a margin perspective at this point of time. So our take is that a lot of these mid-cap IT companies, rich in valuations, are way ahead in terms of the key pivot levels on our own methodology. And therefore, pullbacks is something that we'll probably see, both from a valuation and a price perspective. For large cap names, obviously, results will do a lot in terms of the re-rating of the sector. But I'm expecting a softish set of numbers probably to come through, and commentary also probably to remain a little bit on the softer side. So I think we'll wait for numbers to probably come through for the sector as well.
All right. Hi, Mayuresh. Good afternoon. Mayuresh, I wanted to ask you about Mahindra & Mahindra Financial Services. The quarterly update has just come in. The disbursements for the month of June, they're up by close to around 12%. Numbers just coming in. For the quarter, the disbursements are up by close to around 28%. Those are the numbers that have come in. They've also said the collection efficiency is at around 96%. The only problem, so to say, is that the stage 2, they're saying it's expected at around 6.5%. It was constantly in a declining trend. I recall that the stage 2 assets, out there, gross stage 2, it had declined. The previous quarter, they had mentioned that from around that 10%, it come down to around 6%. Now it's moved up to around 6.5%. Your view on the stock from these levels?
Afternoon, Nigel. So for the space as a whole, including M&M Financials, the kind of updates that are coming through are very, very reasonable. You look at the updates and then the commentary for most NBFCs, specifically within the MFI space. And there are a lot of tailwinds happening for these players as well. To a large extent, the kind of overall book that they've probably got in the system itself, almost 4 lakh crores, expected to grow at a very, very decent pace over the next few years. 6 crore household with an average borrowing of 50-odd thousand, expected to be around 8 to 10-odd crores in the next 3 to 4 years, with an average borrowing size of almost 80 to 90,000, which means the book can actually double in the next 4 to 5 years in the MFI space. Having said that, the kind of disbursement growth that we have probably seen for the space as a whole, including M&M Financials, has been very, very encouraging. We are almost at the end of the rate hike cycle. So to a large extent, the better capitalized NBFCs, including the likes of M&M Financials, the stability in NIMs will largely be maintained. It obviously will come off from the peak levels seen a few quarters back, but it will be still better off than a whole host of NBFCs where the credit ratings and the accessibility to funds is a little bit on the lower side. So I think the disbursement growth, collection efficiency has shown a good traction. But within the MFI space, apart from M&M Financial, whoever holds it to definitely hold on. I think stocks like a Ujjivan Small Finance Bank, where the advances book has grown at a very decent pace, has crossed 25,000 crores. Deposit book around 24,000 crores. Net NPAs at 0.04. The housing part of the book has also compounded at a very good pace. Collection efficiency almost at 100% and capital adequacy remaining strong. Similar to the likes of Credit Access Grameen. I think the collection efficiency is extremely strong, expecting double-digit growth with 11-12% NIMs being maintained with strong capital adequacy. I think this space probably looks very, very good. Anybody holding on to M&M can hold on, but even with Ujjivan Small, Credit Access Grameen, look to carry on the momentum as far as earnings is concerned.
Okay, so that's a lowdown on NBFCs. Actually, let's pull up the Nifty PSU Bank Index if we can. Mayuresh, hi, my next question is going to be on the PSU banks because there's a catch-up trade going on in the market. Let's pull up both the charts. I mean, this year, the Nifty is now up about 6.5%. The Nifty PSU Bank is actually down for the year, down about 1.5%. And that's the reversal that seems to have started playing out. At all-time highs, people looking for fresh ideas, looking for stocks that haven't run, and PSU banks haven't run. Mayuresh, now the question is this just going to be a one day here, one day there kind of a move, just a one-day rally? Or do you think that we are going to see a serious catch-up? PSU's on the move again after what was a phenomenal PSU bank here last time around.
Afternoon, Surbio. Absolutely. I think they were in a structural bull run of sorts in the last financial year. And to a certain extent, prices have actually cooled off or come off in the past few months. Now, 2-3 factors. One, I think the expected loss provisioning. How are a lot of these PSU banks going to account for that? I think that is one of the biggest headwinds that the entire pack probably faces. The second element is in a rising interest rate scenario, you obviously see deposit rates go up, and NIM compression is a given for the banking sector as a whole. A lot of commentaries are hinting towards compression of NIM probably happening. But the better capitalized banks should have relatively better performance, like the better capitalized NBFCs as well. And the third aspect in terms of the entire credit deposit ratio and the provisioning itself, which will probably rule in terms of the asset quality monitoring. GNPAs, net NPAs have come down as a whole for the PSU banking universe as well. And therefore, I think the better rated PSU banks should probably still have some steam left. What we've got on our radar, so to answer your question, is Bank of Baroda within the PSU banking space. Around 2-3% off pivot at this point of time, and therefore that's on our watch list. But most of these parameters that I'm speaking about, both in terms of advances growth, NIMs expected to remain stable over the next few quarters, credit deposit ratios expected to remain extremely strong, along with a very high PCR that they've probably done, ensuring that the pre-provisioning operating profits remain on the higher side. So I think one of the ideas from the PSU banking space will be back.
By the way, pharma selling off now. Sun Pharma's down 1.8%. It's taken over as the top Nifty loser. Cipla's moved to the low point of the day, a cut of 1.5%. Dr. Reddy's is down nearly 1.25%. So pharma is now at the day's low. Get into a break. My race to stay on. We need to get into a mandatory break before the markets close. As we do that, let's get you some market opinion. Earlier today, we were joined by Manish Gunwani, Head of Equities at Bandhan AMC, to discuss the state of the market and some key sectors that he's betting on.
I know it's all-time high, but if you see on a 2-year basis, the market hasn't really done all that much. We are in a fairly peculiar configuration where the Fed is hiking rates, commodities are correcting, but at the same time, EM currencies are doing well. So I think the story of this year is actually the fall in the dollar, because if you see typically when the dollar falls, commodities go up. So the surprising part is commodities are falling, but yet emerging market and emerging market currencies, they're doing pretty well. So that's the peculiar configuration we're facing, which is kind of, I think, being the main contributor to this bull run of recent times. I think a bet on rural makes sense. Overall, our view is that the domestic economy is poised better than the global economy, because while we are seeing emerging markets do well at this point of time, the intensity of monetary tightening is such that you have to be prepared that at any time some big global event may happen, whether it's in credit or geopolitics, etc. But I think the domestic economy is on strong footing. So our focus or our overweights have been more in domestic sectors, which include financials, as you mentioned, cement, real estate, industrials, auto, etc. So I would think that if the stocks have done very well and let's say they continue to do well, you have to be a bit cautious on the sector. First of all, I personally am bullish more on general insurance than life insurance in terms of premium growth over 5-10 years. But having said that, I do think that both offer decent risk reward.
Well, 145 points, and we are at, what, 19,336. Look, things are looking super strong. I mean, actually, if anything, we are at the high point of the day, so that's quite something. And I think with the Nifty Bank has also picked up pace from the last time that we looked at it. And you got the Nifty Bank up almost a full 1%. We're off the high point of the day on the Nifty Bank, but, good going. Mayuresh is still with us. Mayuresh, do you track something like ADF Foods? Huge volumes on it. And it's also, by the way, made a new life high after many months, almost 9-10 months. It's broken out into fresh highs. ADF Foods.
Sorry, Prashant, unfortunately, don't track.
Okay, all right. It'll maybe figure out, come up in the volume quant-based something. I mean, if you're tracking, if you have a filter or something, because it's got large volumes today. Power is another space and stocks that one hears about quite a bit. JSW Energy is doing well. Actually, out of the power names, that's the one which, many sell-side brokers are pushing. Do you have a view?
Looks interesting for a couple of reasons. One, I think out of the entire capacity that is incrementally expected to come through from 6.6 gigawatt to almost 9.8, the entire capacity will be renewables. So the management is very, very hopeful that by the time we land in FY26, 60% of the top line will come in from renewables, and they probably are extending that to 80% by FY30. Now, the kind of capex that probably comes through for thermal plants, solar plants, wind plants as well, entry barriers become extremely tough. And therefore, I think once this entire ecosystem comes in play for JSW Energy in general, and with accessibility in general with coal mines and the sorts thereof, you're probably expected to see cash flows actually improve quite significantly till FY26, resulting in both an absolute EBITDA growth as well as absolute growth in EBITDA margins as well. So yeah, I think the sector is probably in momentum. I think a lot of factors actually acting as tailwinds for this.
As we're getting into the last few minutes of trade, I just want to pull out the chart on ITC. What a move today. Now it's a 3% gain, and these are, of course, fresh all-time high levels for ITC. Stock touched a high of 460. Yeah, so this is blue sky territory for ITC, and quite a move, 3% up. Mayuresh, before we let you go, so the market's on the move, ITC is on the move. The argument is this is still probably the cheapest consumer stock there is out there. Would you look at buying at current levels?
Yes, it probably still persists with the argument of being the cheapest stock from a valuation perspective, but it's run up quite significantly, so I think we do hold this in our global focus list. But it's a little bit rich from the runaway standpoint over the last few months. Obviously, the expectations in terms of their cigarette business expected to do well, being a cash cow for the other businesses where a lot of capex is coming through. Hotels business on fire at this point of time. Agri trading, paper business has come back very, very strongly. And therefore, the consolidated numbers should also hold up for ITC. But I think it's run up a little bit too much for comfort. We still hold it in our focus list, so anybody holding it can hold on. Fresh investments, unfortunately, will have to wait for pullbacks.
Okay, well, we'll leave it there, Mayuresh. Thanks very much for joining us. Good speaking with you. And it's a pleasure having you here, as always. I mean, we'll end pretty much the high point of the day on the Nifty. So 19,335, basically above the upper end of the rising channel, which was at about 19,315. So about 15 points, 16 points above that level is where we're going to end. The biggest contributors to the rise are Reliance. To this 150-point gain, Reliance added 1/3 of it, clean. 52 points comes from Reliance out of the 150. And the other 50 points comes from ITC and HDFC. So that's 100 points between the three stocks. And then you've got names like HDFC Bank, ICICI Bank, Bajaj Finance, SBI. A lot of banks and financial names there which participated very well. So just a top-down view, PSU Banks is a smaller area which did very well. The index, actually, the Nifty PSU Bank Index, one of the top gainers. The top gainer, actually, sectorally. Oil and gas, thanks to Reliance. And then I think metals also did not do too badly. That was higher. Pharma and IT are the two sectoral losers today. Rima.
Indeed, the metal index goes home with a gain of more than 1%, with names like JSW Steel, Tata Steel, Hindalco all contributing on the way up. On the losing side, autos was under pressure, so Bajaj Auto lost 1.7%, The street disappointed by the domestic performance. Sales have fallen 12% on a month-on-month basis. Maruti is weak. The entry-level segment hurting for them. Maruti Suzuki down 1.25%. Technology sees profit booking ahead of numbers next week. So TCS, Tech Mahindra, and Tech Mahindra, there were a few downgrades as well post the run-up, and weakness seen in pharma names. Sun Pharma, Cipla taking it on the chin.
Well, for the mid-caps, it was a quieter session today. The mid-cap index has underperformed the Nifty and the Bank Nifty by quite a distance, quite a margin. Nonetheless, there were some movers and gainers. We've been talking about the PSU rally, PSU Bank specifically. So look at Bank of India, Canara Bank, even a Bank of Baroda. These stocks are up anywhere between 4% to 5-6%. So good day there. L&T Finance Holdings, with the management change being announced, 7.5% up on that stock. And then you have some more. Of course, the refiners had a great day today. BPCL, IOC, all up between 3 to 5%. Easy Trip was another one that was up and about. But the visuals that you're seeing on your screen now are the gift Nifty, of course, being launched today. Market is about to shut. And these are, of course, all the foreign contracts that are being traded right here onshore in India now. I think, okay, so those are the officials, NSE officials, and of course the exchange officials at Gift City. But Prashant, I think you're mentioning that there's a 10-minute window. I mean, right now, 3:30, the cash market's shut, but Gift Nifty trades for another 10 minutes or so.
Yeah, I think 3:40 is when the first session of the Gift Nifty starts at, I think, 6:30 or so
6:30 in the morning,
and then 3:40, there's a break, and then it starts to trade a little later in the evening.
For a total of 21 hours, is what he told us.
Yeah. So, actually, I think the people out there at the in Gift City are getting ready to address the media, take questions, etc. There's a press conference lined up. So we'll slip into a quick commercial break here. On the other side, we'll go across to that, and of course also put the spotlight on auto sales numbers which have come in for the month of June, and a whole lot more. Stay with us.